Good morning and welcome everyone. This is Monday, July 13th, and I'm Michael Venezia. I'm the head trader here at Tradeview Markets, and we're waking up Monday morning with a strong open across the board. The Greek deal in the Eurozone came to a debt deal. Thank God, so to speak, in one way, and we don't want it to end in another way. If you're watching the videos for last week, we were trading these reverse volatility ETFs and the VIX, the VXX as well. TVIX and UVXY being the former. So you know what, I'm looking at a little bit of the volume this morning on these, which have been very active. I'll go through them in the charts in a little while, but I would usually expect these to die down. But you know what, we applaud the volatility. You know, next, you know what I mean? I hope the country survives, everything gets paid off, we move on. Regardless, the reason why I wish the Greek deal would have hung over for at least another week, and that is being greedy in Wall Street terms. It's not because it gave us great movements in the markets, and once again, if you've been watching the videos the past week, we have been playing these reverse ETFs and a handful of equities like Fitbit, for example, pretty well. So I wanted the Greek volatility to keep driving the futures up and down and have these movements because we're coming into earnings season in the U.S. Wells Fargo, JP Morgan, Netflix, Google, Johnson & Johnson, CSX, multinationals like GE and Honeywell are reporting. So you know what? If they took the TVIX and all the volatility that you can make the money away, I want it, but put that aside. I wanted the futures to have these wild futures move. Shanghai, by the way, is probably still going to help us, so we still have something to go for us. But I wanted to see these wild future moves, and I wanted to see how these stocks that come out with earnings react. Hypothetically speaking, let's say Google, which is I believe Wednesday evening. I wanted to see, you know, the futures open down 20 handles one day, and Google, you know, have that reaction to numbers, whichever way it is, and have it settle. And listen, if the futures are having or the SPYs, if you will, having a 5-point range within 2 or 3 days, that's a good gauge to see how these earnings stocks are acting. Because you're going to see if they're, if the future, for example, last earnings season, we still have the strong dollar hangover. You know, the market was in a nice uptrend. So usually companies that reported acted true. Some reacted negatively, some acted positively, and continued those changes. But they had little rain subsequently here, afterwards. So Google comes out with numbers, and once again, not to be redundant, whichever way it is. I wanted to see how it reacted in wild futures moving to see if it was really subsequently weak and or strong, predicated upon those very numbers. But you know what? They didn't give us, the debt deal was reached. Our futures are looking up 14 handles. At one point, they were up 18 handles at the high from early in the mornings. Europe is up between 1.5% and 2%, this being 7 o'clock Eastern, New York time. So listen, there's still 2 hours to go. I think once again, the Greek thing is going to kind of be put to bed, but more importantly, that was good for the volatility, but going forward, we're going to learn how to trade because Shanghai, which I always thought was actually more important, if you will, driving our futures and our companies as opposed to Greece. Greece was good for the volatility, but the strong dollar earnings season coming up, the Shanghai composite having wild volatility, and the threat of a rise of interest rates coming up really actually sooner than later. I'm not calling it by any means, but it is coming. So that's really going to drive our traders in terms of taking positions. So let's get to a couple of things right here. All right, here we go. The SPYs, as we're talking right now, are trading 208.90. So they're about right here. So you know what? I'm going to wait. I wish I could give you something sexier in this morning. I'm just going to let you know that we're going to start winding down from trading this TVIX, which has had a 5-point range. You could see right there, this could be a rail stock. It doesn't matter. Stocks have these type of moves no matter what it is, usually once or twice a year. And this was this time. Hopefully we'll see it again before the end of the year, but certainly you don't expect these stocks like the UVXY to go from 25 to 60 on 20 million shares. The stock sometimes trades more than Facebook. So we're going to wait for earnings. I'm not really going to try to fade this open. I think the news is out. The Shanghai closed up 2.5%, so we might stay a little bit strong. Let's see how Europe closes at 11:30. And you know what? We had good moves. Whether or not you made good money or not, I wish you did. But we're going to still have continued volatility, and it's going to be predicated upon what happens in the U.S. with good earnings where we can take good, solid, and big positions instead of trying to take a stab using or trying to time the market. We'll take it, but that's not really what we do. Really, traders make their big money because, trading any type of indice is a gamble. Trading a company or a group against that indice is more of an edge. So with that being said, I hope everybody has a good trading day and always do your homework. And until then, thank you, everyone.